Hello, this is Solomon Davis, Right Side Trader from Right Side Trading, where you can learn to trade on the right side with confidence. Today is July 22nd, 2021, and this is a quick trade review. Again, as always, this is for educational purposes only. This is not a trade recommendation because we all know trading is risky. You can and you will lose money at trading. So please check with your financial advisor. Please check with your significant other. Make sure trading is something that is suitable for you. This is just I wanted to go through this to see how well it actually works on. I'm actually doing this from a laptop remotely from my home and all. So I need to see how well my laptop works and see if I'm going to be able to do this. I'll be away for a while and I won't be able to actually trade because I don't have all my equipment. When I don't have all my equipment, I've learned it's best for me not to trade live. I can trade virtual trades and see how well that goes and see what's going on. And today I kind of really jumped up and tried to get into the virtual thing and see how well it goes. And it proved to me, you're really not in the condition to actually trade the live market. So that's why I'm doing this trade review, to also kind of remind myself, because I do listen to my reviews myself and go back to them, and I put notes with them to remind me what they're about. And this is going to remind me about, do not trade when you don't have all your equipment. See how the virtual trade went. Now, virtual trades, you're pretty free. You're pretty much at ease. You know you don't have any real money on the line. But me, I still try to treat my virtual trades as my live trades, how I actually trade. So that's the good thing about it. And I'm looking at the market the normally way I usually look at it, but I don't have all my screens up like I normally would be looking at. Be able to just glance, and have my account up and be able to just click, and make trades while I'm glancing at stuff happening. I don't have that in place, so that's why I can't trade. And plus, there's other things going on, and I'm not totally focused, so I shouldn't trade anyway. But let's go ahead and take a look at this. One of the things as a day trader, you still need to look at the big picture. This is a new tool that I've been using, and one of the big picture things that I like looking at with this tool, it's kind of like, give me an overall picture of what's going on the different time frames. And this tool is like a one-shot, give it all to me. This top stochastic tells me what's happening on the daily picture, because this is based on, this stochastic is set up the way I look at my daily stochastic, and the chart that I'm looking up at the top is a daily chart. So on the daily, I can see that it is dropping, and by the end of the day, this thing ended up seeming like it wants to turn around. And it is after the market is closed on Tuesday. On my weekly, this right here one is set up for a, let me slide just a little bit. I think it's set up for daily. You see, this is daily here. And how did I get that to highlight? You can see daily right here, and up here where the mouse is moving. And I'm using a mouse pad. I don't even have a mouse. I didn't bring a mouse with this thing. But it's set up for a daily. The next one is set up for a weekly, and I'll give me a weekly picture. And then the bottom one is actually set up for a monthly picture. So at a glance, I can see, this is the best way I can see, what I could figure out for myself using just my laptop to get me a quick glance at the market in one snapshot. I could see on the daily picture it was dropping early first thing this morning. I would have been expecting it because this is looking at a few days and this stochastic is dropping. On the weekly picture, this thing may have already reached the bottom and may be looking to turn back around. On the monthly picture, all this really tells me that it's still green on the monthly candle. And also, that's a good thing for me to know the way I trade and the way I like looking at the market. Now let's go look at each one of these things on the other thing that the other indicators that I like using is stochastic and just the pivots. That's all I'm gonna look at. That's all you ever usually see me looking at. I put this average true range on here, so I can get an expectation of how many points I should be able to get on a trade. If it's moving 40 points, 50 points, I should be able to get 10 points, 15 points a day, on this particular product if I'm trading in the right direction. It shouldn't be a problem. But right here, looking at this, I can tell from the previous day, it looked like it may have hit a bottom and went higher. It did do a pullback today and hit right at a pivot on one of the daily pivots and went higher. That was a great entry down there. I did. That was where I added to my bad trade, and my bad trade ended up turning into got to a point where I was able to get out of it and add a good trade. And that's the big picture of it. Now on the weekly chart, you take a quick look at that in the morning and make sure everything looks like. You can see on the week, if you're swinging trades and all, and on the week, this thing is moving almost 100 points a week and stuff. You can look at it. It's averaging about, so if you're swinging something for the week, if you can get half of that, that's really good. But that means you're going to have to get somewhere near the bottom, and you're going to be getting out near here. If it's dropping, you got to get somewhere near the top, and you're going to catch somewhere right here. If it's already moved 50 points on you, trying to get 50 points on that candle, like this candle right here is already probably moved over 100 points, it's very unlikely you to try to make 100 points on this candle. It's very unlikely, meaning that it's very unlikely from this thing to go where it closed at 22.93 to 23.93. That will be breaking these highs. So again, set the right expectation also when you're trading. That's one of the reasons I'm looking at this. This is what this tells me. I kind of know what the market has already done. I kind of know what to expect the market to maybe do. If it wants to continue up, I'm using my pivots as my targets. It can still maybe break that 2300, but that's just 2305. So on the next day, this thing just going from 22.94, say 22.95, rounded it to 23.95. That's only 10 points. So me trying to squeeze more than 10 points out of this thing tomorrow, swinging a trade, it's kind of crazy, in my opinion. But it can drop back down because it's going through all this stuff that sold off. It may get up here and sell back off, and you might end up getting this candle going all the way back down. Don't know. Nothing's guaranteed out here. Nobody knows what to really expect, but you just go on what you've seen in the past, and you just play off that. You play off your larger time frame, your smaller time frames, and whatever your indicators are telling you. Okay, now let's go to the monthly. The monthly is showing you that this market has not been going anywhere. It's been slowly grinding up and all. Today it turned green. I don't know if it turned green. I think it probably was almost a doji, red doji, a straight doji this morning. I don't know how low it had went. This is a monthly candle, but for the month, it may have just turned green for the month today. The move that we had. But the month is green, and it looks like maybe on the monthly picture. Now, if you're looking at a bigger picture and where this thing can go, you're willing to hold those trades maybe a little bit longer, maybe it can go up to maybe a 23.28, say 23.30, I'm just looking at that monthly pivot there. That monthly pivot is at it's kind of hard, 33. Looks like that's a 33 there. My eyes are not that good. But that's what I see on the big picture, and that's how I go about analyzing the big picture on whatever I'm trading. And I trade all four indexes. Right now, I'm only concentrating looking at the Russell and see how it's doing So let's go down to the daily picture, and let's take a look at some trades. Let's just take a look at the last 4 days. I'm going to zoom in back here. I should have done this already, but I am going to look at the last 4 days. 1, 2, 3, 4. And what day was this? This was 17th, and I want to see 16th. And yeah, this was last week. Last week I definitely wasn't feeling well. But let's look at that and just kind of like see. What I really want to look at is the last 2 days, because the last 2 days, Monday and Tuesday of this week, I was looking at it, and yesterday, as we can see, was a very bullish day. So me and my virtual trades made me look like I knew what I was doing. But then this morning, it went down against me a little bit. And the only thing that really saved me that the market actually bounced off this pivot, like I was expecting it to do. But I don't know. Nothing is 100% here, but that saved me. But it also showed me I'm not calling direction right on this opening like I should be and all. And things can go get really bad, and could have got really bad if it went any lower. The pivots that you see on here, again, I'm back to my daily pivots, and I have my custom pivots. These dashed lines are my custom pivots, and the dashed lines represent what I call H1, H2, L1, H1, H2, L1, L1, L2. This is the opening line, this dotted line right here where the market actually opens. I like to know that. And this is previous day high. This blue line right here is previous day high. And this line, it should be a brown line somewhere in here. Oh, this is it down here. Because the previous day low is really this low way back here. And this brown dashed line represents my previous day low. I haven't changed it to have this line here actually dotted the way it should be. But let's zoom in on a couple of days here, and that's all I'm going to do. I'm going to look back at the time when again, I knew I wasn't doing good and the market was going down, so that kind of gave me I'm still on the phone with one of the traders, and now I remember telling her I would just go out and when I saw what had happened here, I said I would just go out and ride my bike. I saw what had happened there. I said I would just go out and ride my bike, and I'm not one to trade the market down. I said it looked like down days. Don't even remember what happened here, but this hit a previous day low, and went back up the pivot. So that was a pretty good thing off the pivots and stuff. But let's zoom in and look at a couple of days a little closer and a little bit more details. But that's really all you really need to see and really need to know. But again, all this I do this all based on 5-minute candles. So on this day, which was the 17th, and we had a green candle to the upside. And that's the other thing that I tried to make people understand, that when I'm trading the Russell or any of these other indexes other than the NASDAQ, I really haven't done any studying on them. I don't really know what's going to happen, and I never really know. I really don't even know what's going to happen based on any kind of math, any kind of statistics, based on any kind of studies that I've done on this particular index. So I'm just playing it really by the seat of my pants and playing it by my indexes and based on what price action I'm seeing, and based on really the price action that I'm seeing. On here, I'm used to seeing a green candle go up and then go higher, but it had also, based on what I'm seeing, it had reached my H1 line. I've seen hundreds, thousands of times where my NASDAQ reaches this point, and this indicator that I have, my custom indicator that I have, tends to work on all markets, all stocks, even Bitcoin, even your crypto stuff. It works on all that stuff. It's just, I call it my friend magic voodoo numbers and all. But it usually identifies areas in the market where we're going to get reversal and targets and all. So the market that went up to here, a lot of times I may trade this thing pre-hour and may get a quick short trade. A lot of times I'm usually only looking to get 2 points, 1 point, 5 points is a lot and all. But I can see a target up there. Maybe I shoot for that target if I get in fast enough and shoot for that. If I'm trading before that and I see that I only have less than a point to reach my target, and I won't take that trade. I want to see what's going to happen. And then once I see that I get a small, almost doji on that trade, I say, okay, is it going to reverse and go back down to this target? So that's what ended up. As we can see, hindsight, of course, we can see that's what happened. But you're going to get to the point where you can see that this thing does this type of pattern all the time. It goes from opening to this high point, back to opening. If it doesn't go back to high point, it goes down to low point. And then from that point, after 11 o'clock, I always say, I don't know what it's going to do. All the studies that I've done, even on the NASDAQ, only trade up to 11 o'clock. So let's go ahead and look at the next day and see how it went. And this is a web actually maybe captures some data on some of this stuff. We're going to look at this day right here. This is the 18th. Again, we was near previous day high. A lot of times when I see the NASDAQ near previous day high, if it doesn't turn around right away, and and it ends up breaking that high and going higher, I expect it to break the morning high, whatever that. And this morning high that I'm seeing right here is 61. If I was able to get in somewhere, you know, if I'm looking to get 2 points on this trade, I'm gonna be looking to get 2 points somewhere below that. So I'll be looking to enter this trade somewhere down near 60 or 59. If I was able, and there was a possibility of me actually entering that trade anywhere from that 60 to 59, expecting to get 2 points. So that trade, in my opinion, that's the way I would have traded it to the upside. And then once you start seeing these doji, and once you know if you've broken high and you see dojis, if you wasn't out of that trade, it's time to get out of that trade. And if you want to trade it back to the downside, there's a couple strategies that you can decide to trade it to the downside. You see this doji, if it ends up, you know, going below this point, you take that trade there, or you take that trade right at the doji, and you create it where you take your trade 2 points below that high of that doji. That doji is 68. You want to be short at 66 and all. So 66.1. So 66.1, you've been short right there, almost at the opening of this doji candle, and then your target is down. Your target can be right. If you was in 66, your target would have been the top of this area right here, the morning high that it broke out from, or your target can be down here. When you're looking at these trades, and again, I'm short-term trading. I'm looking at what's in my view right now. A lot of times I've already looked at the big picture. Now that I'm intraday trading, I'm looking at what's in my view. What are the other traders who are trading also? What may be in their view? I don't know. That's the whole thing. That's why I say what's maybe in their view. But what's their first targets? Their first targets are going to be pivots. Their first target is going to be morning highs. Their first target is going to be previous day's highs, previous day's lows. So you learn to look at those as your indicators, or those as your targets. Next day, 1 more day, 2 more days, we'll take a look at. So I really want to look at today and yesterday. So this is today. Let me just slide back to yesterday, because yesterday was this up day right here. So on this up day right here, we had a red day down. So first of all, I'm kind of do I really want to take this trade? Do I really want to trade today? But I remember a trader was saying this down candle when it was happening. She said, "Is it because we was looking at the market pre-market and trading?" And I say, "Is it going to go down to pivot?" I said, "Yeah, it probably hit pivot, and if it hit pivot and bounce, I would like to go long." So it did hit pivot, and it came back above pivot, and yes, I was able to get long. And again, it sounded like, okay, yeah, I called it right. I know what I'm doing. I got this thing down. This thing run from 49, 49.50 all the way up, and then my first target was this line right here. Don't ask what it is. 55. So 50 already 5 points up. Then it all the way up here to 60, 69. So that's another 5 points, and all to 60, and another almost 20 points for the day. Boom, I'm ready to get back on the live account, I think. But then I realized, I said, I got to go 1 more day, which was today, and let's see how that went. Because this went from it went from 50. So I know I didn't nail that bottom. I didn't get into the trade until about 50, and it went all the way up here to 70 and stuff. So, virtual trade. And that's okay. This is not this. And again, virtual trades, you get where you're not so in and out of the trade, because again, it's not live money. So when you start seeing you got money in your trade and they start pulling it back against you, you don't think too much of it, and you just start looking. You play by your plan and your rules. Because my rules are kind of basic. As long as I'm making higher highs and higher lows, I should stay long. Right here, it got to a point where a line that I had identified in the market. This line was been here, and it slowed down. So I kind of said, okay, I expect this. Let's see what this next candle is going to have. This next candle, I remember saying, this next candle is going to be a big green. I expect it to go to this target right here. And also, I got a big green, and then I got close to this target with this next candle, and I was almost there. It was 66, 666, as you can see, the top of that candle, and I said, oh, that's just the whole numbers thing that everybody's playing out there. So I'm not going to let this scare me out of my trade, as long as you don't break this low right here. And breaking that low was giving back 5 points. Trying to get 10 more points though. and also I was kind of okay with that. And this is stuff that really kind of just goes on in my head with the numbers. I'm a numbers guy. I look at these numbers and I'm calculating these numbers just like crazy. I'm back and forth, and I'm not. And the thing is, I'm not as fast as I used to be, but I still see my numbers, and say I wanted to go to 70, it didn't quite get to 70 right away. I think this candle right here popped up. Let me see the high of this candle. The high of this candle was 70.06. So this candle got me out, and then I watched it go higher. Let's go back here, and let's zoom here. So, and I said, okay, I'm good, and that's why I want this. Then the market ended up going high, drifting higher for the rest of the day, almost another 15 points higher for the rest of the day. And there was no reason to get out of it. It came back down and test this level and just drifted on up. So let's take a look at today when I thought, okay, I'm ready, and let's see how that went. Right here, first of all, it came off a big. The market was kind of drifting down all morning, but I had got where I thought it was going to bounce off this area like it had bounced before. So I ended up getting long at 76.1. I ended up getting long way up here. I ended up getting long. What's the high of this candle? Let's just show you how screwed up I am, and my expectations, expecting the market to go back. Really, my target was up here at 82, almost 83. So I think I probably got in here because again, I was looking at it pre-hour. The high of that candle is 76.5. I remember that entry was 76.1. And then I looked, 3, 4 minutes, 5 minutes later, and I realized you need to wait until that first candle finished. Number one, you broke that rule. Now you're on the wrong side of the market based on your statistics, even on your Nasdaq, and all these markets from what you've been seeing seem to still follow that rule most of the time, more than 50% of the time. So now what you gonna do? But since it's a virtual trade, you end up okay. You let it ride, and you just scalp it back and forth. You scalp it back and forth, and you see things happen. You try scalping it, and it goes against you, and you scalp it back and forth. You scalp it back and forth. Then the person that I was trading with, they were trying to short the market, and they wasn't staying in their trade. They shorted the market. It went up against them a little bit, and they went out of their trade. Me, I'm steady scalping the thing. Going every time I had an opportunity to go long, I was going long. And then when this happened, and I saw this kind of almost bearish-looking little 5-minute pattern right here. And let me get on the 5-minute chart. I see I'm on a 3-minute chart. That's why it's looking kind of funny too. Let's do this. Let me just change this up just a little bit. I know I'm going on a little long, but I'm okay. I don't have nothing else to do. And that's not it. I know that's not it. These crazy charts. And that's good enough right there. Because this candle, I remember getting long, trying to make some extra points up. And I had made quite a few points back, and my break even had came down. I think I could have got out around 70. I got in at 76. Wait, why is this looking funny? Let me look at the highs of this candle. Yeah, I got in at 76.1, and my exit had came down probably about 3 or 4 points. So it was around 76.3 because it was close to this pivot where I thought I could, if this market came back up here, I can get out and have a break even. So I had made like 3 points or so, just trying to buy and sell, buy and sell, buy and sell, and plan it. And it didn't come back up here. And I thought this trade that I had got into was going to get me back up here, and it didn't. It ended up going against me, and I ended up taking a half a point on that trade. And then we started. The girl that got short was short. I think she ended up getting out of her trade on her short trade, thinking it was going to go back up here too. That's the other thing. You gotta kind of like stick. Me, I tell her, I'm way up here, and I don't know what I'm on. And as I said, I'm on the wrong side of the market. The market might be making waves heading to the downside, but the downside target is pivot. We both agreed on that, and then once it came down here, I started buying again. First I was taking a point, half point, and then I took a couple of points. So now my break even, actually was around 70. It came down to, yeah, 70. That's right, it was at 70. And I had set an order to get me out at 70 and got out at 70 and all. But I realized, okay, I can stress myself out trading this thing virtual like this. Well, it's no stress really in the virtual, but that's what it would be in the real trade. And would I do exactly the same thing? Am I really ready to start getting back into my live account and trading this thing? I said no. I said I should actually just leave it alone and continue to watch and try to sharpen my skills in the virtual side. But as you can see, red candle down came all the way down to pivot. It broke my this is my L1 level. You know, it broke it right away. I expected to go to whatever my next target I can see. You know, that's the other thing. What's my next target that the market can see? And it was this pivot. And then when it actually turned around here and came back up to this level, I was done before that level. Because I made about 3 or 4 more points here where I actually got out of the trade, and I was profitable. So I said, okay, I'm not ready, and the market actually came back all the way back up. I remember her getting long and trading long. Don't know if she. The next target back to the upside was back to this pivot. Again, you see L1 to open, then open to L1. Like I said, a lot of times if it doesn't break these areas, it's going back down to the pivot again. And as you can see, it went long pivot before it actually made it back up to H1. And this is what you see with this custom pivot that I use happening all the time. But that's all I really want to share today. I know I was kind of long and kind of winded, but it was for me to kind of review the last 4 days what I've been looking at and how I've been trading it, and trying to get myself back in the swing of actually things, and see if I'm ready to get back in here to make some real money. And I see maybe not quite yet. Just take your time and all, and it's not going into your pocket anyway. You're just building your nest egg, so you don't want to lose your nest egg. So again, this is Solomon from Right Side Trading, where you can learn to trade on the right side with confidence. Talk to you later. Bye.